you mentioned, the functions, assets, and risk assessment. And of course, there are certain transfer pricing methodologies that are, I mean, of course, there are lots of them, but there are probably a few that are more or less understood and accepted, at least within certain frameworks. Do you want to touch on those?
Absolutely. Yes,
Yeah.
Aaron. So there are a few transfer pricing methods which are almost like globally accepted. There is OECD guidelines which we would be mentioning, repeatedly in this discussion. But those methods are, as I said, I mean, whether it is Canadian tax laws or the tax laws of the US or UK. So these are common. So there are about 5 methods which are commonly used. One is comparable uncontrolled price method. So this is as simple as you selling a pen, and you compare a similar pen and see if this pen is costing like $10, and the pen that your client has is costing $50. Then there has to be something which is not right there, or if broadly it is a similar thing. So since this is where the characteristics of the asset or the product is compared, so this is one of the most difficult methods to be applied. This is definitely this method has the most weightage, because you're comparing prices directly with the prices of the other product. But this is something which in practical is the most difficult one, because you won't get the prices especially of the services or intangibles or other products so easily. So that is one. The other method is the resale price method. Under this method, related the gross profits when a resale is made are compared. So if based on, again, that functions, assets, and risks an entity is performing, the gross profits that they are making because of those functions, assets, and risks is compared to a similar comparables which are dealing with non-arm's length parties. So there are practically there are certain databases which you can look at to determine those gross margins, and those are compared. This is basically used in case of retail or retail transactions. The third one is the cost plus method. This is used in case of manufacturing companies, the example which I gave. So again, profitability is compared with independent, with non-related companies. And in case the profits of a particular corporation that you're testing is comparable to the profits made by independent corporation companies doing those functions, assets, and risks, you can demonstrate that your price is basically going back from profitability back to the profits is at arm's length. The fourth one is a profit split. As the name suggests, you determine the overall profits of the group and you split it between the related parties based on what they're contributing, what they're bringing to the table. Mostly intangibles are priced based using this method. The last one is the transactional net margin method. Here, the profitability, not of the transaction, but of the entire company is compared to independent companies. So the example which I gave was where the Chinese company is manufacturing computers. So, and it is, since it is selling to its related party in the US, so if we want to find out whether the transaction is at arm's length, we determine the profitability of similar computer manufacturers basically in China or at least in Asia, and compare it with our clients' net margins and determine whether they are dealing at arm's length with the related party or not.
Fantastic. Thank you for that.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.